Welcome to Value Vest Daily. Look, if you've been watching Bitcoin's wild ride, you have definitely seen MicroStrategy, ticker MSTR, get absolutely pummeled in this latest drawdown. But what if the worst is over? What if, according to Wall Street giant Bernstein Research, MSTR is now one of the smartest, de-risked ways to play a Bitcoin rebound? Today, we're going to rip open Bernstein's explosive note and get into the financial engineering, the secret sauce, that might have just changed the game for this company forever. Let's get into it.
Okay, but before we dive deep, the usual but super important stuff. This is all for educational and informational purposes only. It is not financial advice. It's not tax advice. Please do your own homework and talk to a pro before you make any investment moves. All right, let's do this. So here's the game plan for today. First, we'll hit that headline-grabbing price target from Bernstein. Then, and this is key, we've got to travel back in time a little bit to understand the old debt problem that made this stock such a nail-biter. From there, we'll get into the absolutely brilliant fix they've engineered with something called Perpetual Preferreds, and we'll break down MicroStrategy's own special version, the STRC. And finally, we'll put all those puzzle pieces together to see why Bernstein thinks this is now a much safer bet on Bitcoin. All right, part one, Bernstein's explosive bet. This is what got everybody talking, so let's break down exactly what they're saying and why it really matters when a firm like this speaks. Okay, so it all kicks off with their big picture view on Bitcoin itself. In their note, Bernstein makes a bold claim. Bitcoin has probably hit its bottom for this cycle. I mean, after that vicious 50% drop we all just lived through, that's a big statement. And this isn't just wishful thinking. It's the very foundation of their entire argument. They're not just calling a bottom, they are sticking to their guns on a massive 2026 price target of $150,000 for Bitcoin. That incredible bullishness is the engine driving this whole thesis. Now, this is where it gets really mind-boggling. We're talking about the sheer scale of MicroStrategy's bet here. They aren't just dipping their toes in the water. They are a true Bitcoin whale. This company owns roughly 3.6% of the entire Bitcoin supply. Just let that sink in for a second. A single software company holds a huge slice of the world's supply of Bitcoin. That is some serious conviction. It makes them, without a doubt, the biggest corporate player in the game and a genuine proxy for the asset. And that 3.6% stake, well, it translates into a number that's just colossal. When Bernstein put out this note, MicroStrategy's Bitcoin net asset value, their NAV, was a mind-blowing $53.5 billion. So you got to throw out the old idea of MicroStrategy as just a software company. They have fundamentally transformed themselves into a financial holding company whose fate is now tied almost completely to the price of digital gold. The original business is now just a tiny part of the story. And here's where things just get wild. Bernstein is saying the stock, which was sitting at $138, should be at $450. Just look at that gap on the screen. I mean, when a serious institutional research firm like Bernstein puts out a target that is so far above the current price, you have to stop and pay attention. That's not just bullish. That is a thunderous statement of conviction. They're essentially screaming that the market is completely mispricing this company. Let's just put that number front and center for a second, just to feel the full weight of it. 226%. In a market like this, where people are fighting for any kind of positive return, to have a major firm call for a stock to more than triple, that's a massive, massive signal. So it begs the question, right? What on earth does Bernstein see that the rest of us are missing? Well, that's what we're about to find out. And here is the big reveal. The secret. The real core of Bernstein's entire argument. It isn't just that they own a ton of Bitcoin. The secret is how they've structured their finances to buy and hold it. They argue the company pulled off a brilliant financial move that has completely changed its risk profile. This isn't just a simple bet on an asset anymore. It's become a masterclass in corporate finance. All right, on to part two, the old debt dilemma. See, to really appreciate the genius of what they're doing now, we have to understand the serious danger of how they used to do things. And this slide just lays it out perfectly. It is a night and day difference. See, back in the day, MicroStrategy paid for its Bitcoin with convertible debt. Now, for a normal company, that's fine. But for a company whose main asset is as volatile as Bitcoin, it was a ticking time bomb.
Every time Bitcoin's price took a nosedive, MSTR stock would tank with it, and that created a huge risk that the debt holders would convert their notes into stock, creating massive dilution for existing shareholders. It was a terrifying downward spiral. The new solution, though, it does the exact opposite. It's a shock absorber, not a volatility machine. And you know what? We just saw this play out in a real-world stress test. During that recent, absolutely gut-wrenching 50% drop in Bitcoin, the old MicroStrategy would have been sweating bullets, facing immense pressure, maybe even being forced to sell Bitcoin at the absolute worst time. But the new MicroStrategy, they just sailed right through it. No panic, no forced selling of their precious Bitcoin. They just held on. And Bernstein points directly to this new capital structure as the reason for this newfound resilience. It's officially battle-tested.
Which brings us right to the heart of this whole story. Section 3, the Perpetual Preferred Fix. So what exactly is this financial tool that has so completely changed MicroStrategy's business? Let's break it down, nice and simple. So, at its core, a perpetual preferred stock is a hybrid. Think of it like this. Regular old debt is like a loan from a bank with a scary due date. You have to pay it back. This, on the other hand, is more like getting an investment from a partner who says, hey, here's a bunch of money, just pay me a dividend forever, but you never actually have to give me the initial investment back. That last part is the magic. No maturity date. For all practical purposes, it is permanent capital. So let's run through why this is so powerful for MicroStrategy. First, Perpetual. They never have to pay the principal back. That capital is on their books for good, which gets rid of any refinancing risk. Second, they pay a dividend, which gives investors a nice, steady income stream, making it a really attractive product to sell to raise cash. Third, it's senior to common stock. That just means those investors feel safer because they get paid before common stockholders if things go really wrong. And finally, and this is huge, no voting rights. They can raise billions without giving up any control of the company. It's like the best of both worlds. Okay, so now that we get the general idea, let's zoom in on MicroStrategy's specific innovation. Section 4, the secret sauce, the STRC. This is where all that theory gets put into practice in a really clever way. Yeah, the full name is a bit of a mouthful. Variable Rate Series A Perpetual Stretch Preferred Stock. Don't worry about the name, just focus on those two words, variable rate, because that is where the magic really happens. This isn't some off-the-shelf product, it's a custom-built financial machine. First off, let's talk about the yield, because wow, this is what makes the whole machine go. At the time of the Bernstein note, the STRC was paying an 11.5% annual dividend, and it's paid out monthly, in cash. In a market like this, finding a stable instrument with a double-digit cash yield, well, it's like finding an oasis in the desert for income investors. This high, reliable payout is the magnet that pulls in all the capital. Now, this right here is the absolute genius of the design. Think of it like a smart thermostat for the stock price. It's designed to trade right around $100. If the market gets choppy and fear pushes the price below 100, the thermostat automatically cranks up the heat by increasing the dividend payout. That higher yield attracts new income investors. Their buying pushes the price right back up toward $100. It's an amazing, self-correcting system designed to keep their funding source rock solid, no matter how crazy Bitcoin gets. And when you put it side by side like this on a table, man, the transformation it's just incredible. I mean, look at the difference. Before, you had this constant threat of having to repay debt and the risk of diluting your shareholders just hanging over the company like a dark cloud. Now, that's gone. Before, every time Bitcoin dipped, the balance sheet was under insane stress. Now, it's a fortress. This isn't just a minor tweak. It's a complete rewrite of the company's financial DNA. They've swapped out a fragile foundation for one made of solid granite. Okay, Section 5, let's bring it all home. Let's tie this all together and look at the final investment case. Why does all of this financial wizardry make MicroStrategy a compelling and yet de-risked Bitcoin play for today's investor? So the bull case is now crystal clear. Step 1, you believe, as Bernstein does, that Bitcoin has bottomed and is heading much, much higher. Step 2, you layer on the fact that MSTR owns one of the biggest, most concentrated stacks of Bitcoin on the planet. And then step 3, and this is the game changer, you realize they have brilliantly fortified their balance sheet, taking away the single biggest risk that haunted them in the past. You put those 3 things together, and what do you get? Well, according to Bernstein, you get a cleaner, stronger leverage bet on Bitcoin with a clear line of sight to that incredible 226% upside. And this quote from the report just says it all, doesn't it? The MicroStrategy of today is simply not the same company it was a couple of years ago. It has evolved. By using these innovative financial tools like the STRC, they've transformed themselves from what was a pretty high-risk volatile proxy into what Bernstein calls a much cleaner, higher conviction way to play Bitcoin's potential. It's a fundamental shift. Which really just leaves us with this one big provocative question. By solving its balance sheet problem, has MicroStrategy accidentally created the ultimate leveraged Bitcoin vehicle for us regular investors? It's a powerful thought. Now, of course, let's be real. Any leveraged play carries risk. If Bitcoin goes to zero, this fancy structure isn't going to save them. But if you are bullish on Bitcoin's future, the argument that MSTR has now built a much better mousetrap is incredibly compelling. So, the takeaway from Bernstein is simple. With Bitcoin's downside risk reduced and MSTR's balance sheet looking like a fortress, the stock is set up for a huge run. Please subscribe, like, and share ValueVest Daily for more daily learning opportunities before you put your money to work. And hey, one last thing. Drop us a comment below if you want us to do a deep dive into any other specific high-risk, high-reward opportunities. We read all of them, and we build this content for you. Thanks so much for watching, and we'll see you in the next one.